Federal Reserve announced today that they're keeping interest rates exactly where they are. There's no cuts, no hikes. Now, Federal Reserve is watching three different things right now. They're watching inflation, they're watching the job market, and they're also watching tariffs from Trump here too. Now, inflation sitting at around 2%-ish, which was their goal overall in the first place when we started to actually raise rates a few years ago. They've noted that the job market is strong, but they're also talking about just not really knowing what's going to happen with trade tariffs, with talks with other countries. And right now, they just want to kind of stay stable a little bit. They're not quite sure where things are going to go, and they don't see any reason to jump too quickly and drop rates too fast. Now, mortgage rates, you need to make sure you know that mortgage rates do not coincide one-to-one with the federal funds rate. Since January of this year, we've actually seen mortgage rates drop about 0.5%. Since then, federal funds rate has not changed. So make sure you're in touch with somebody, a broker, a lender, whoever, about your mortgage, about rate changes, because those are going to change every single day. Again, they do not correspond completely with the federal funds rate, even though the federal funds rate does affect things a little bit. Federal funds rate also affects things just like, your car interest rate, credit cards, student loans, all those things too. Now, what about drops for the future? Well, we're looking towards July now. They're saying it's about a 50-50 shot. Not quite sure if things are going to go down or stay steady. So we'll have to keep aware of just what's going on out in the markets because, with the economy, we never know what's going to happen. We never know what could be in the future. But if things have big changes down the line, they're going to be ready to move and they're aware of what's happening in the markets.